Hi, everyone. Let's have a good week. Hi, Kevin. How you doing? Hope everyone had a nice weekend. So we'll start off with the dollar, which last week had a reversal week. Only problem I had with the reversal week last week was the readings that we bottomed on, way under 30 on the 2 hour, a little bit above 20 on the 4. So, this could have just been another ABC. We have to crack 94 before we're going to get anything bigger. It's a trap, yes. Hiya, Brock, Alexander, Zig, Hugo, good morning to you. So with that being said, Euro, kind of the same story. Could have just been an ABC, and maybe we're going to have a blow for one more high up here. I have a hard time wanting to be negative US dollar yen. And the reason isn't because there could be dollar weakness. It's because of yields. And, I talked about that people weren't going to believe the move we had from 0.50 bips in 10-year from here to here, that we would pause and everyone would say it's just a blip. Well, I don't know about your eye, but to me, this almost looks like a flag or consolidation. Look how fast we got from point A to point B. Looks pretty impulsive. And now we're just correcting this overbought condition that we have here, so that we're no longer overbought. We've pulled back from over 70 to 40. And to me, we could get at least a continuation move. This was 22 bips. So I'd say maybe we get above here, 67. That's going to take you up to about 89.90, which is up here. And I still think that this speed line of these two prior highs can take us up towards 120 before this move in yields is over. So that's what gives me pause, makes me want to be long the yen, but I don't, it's in, I don't know for me. Last week, everyone knows I was, shorting Aussie. I was early, but worked out. So here's Aussie now. How you doing, Midas? Jackson Hole Thursday, okay. So here's what I think could happen in Aussie is, we had this first wave down that perhaps we're going up to maybe 72.20 or so, some type of ABC, maybe 40, but looking to sell this one. Hello, Abel. A lot of my old friends from FX Street are here today. Glad you're all healthy and still in the game, you action junkies, you. Glad you're still, at the wheel, at the roulette wheel. It's like being in the mafia once you're a trader, or Hotel California, because you could check out, but you can never leave. Hello, Alexander. So I'm thinking maybe up to 72.20 for another shot at a short. I'll tell you, this is looking heavier and heavier to me right now. We have this little double top in Aussie Kiwi. I can't argue that, it's a bull market, right? Look at this reading up here. But I don't know why we couldn't get a nice pullback towards 107-ish here, 107.50. So we'll see what happens there. And S&Ps, all last week I was selling them. And it's because I had divergences, and the daily's the only divergence left. Look, so we still are diverging, but the 4 hour is too. It's just the shorter time frames aren't. Look, it blew it out on the 2 hour, blew it out on the 1 hour. So I can't do anything immediately with this kind of momentum on shorter term time frames, especially like the 15 minutes. So maybe later on in the week, after it does some work, both sides, maybe I'll do it, but I can't do it here. And maybe we'll, you could hear I'm saying a lot of maybes because, everything we do here is always maybe. Okay. It went out the chart over the last resistance. Even this is one of the last instruments that I'd like to see one more high in, and it's been about 3 weeks or so since we made a new high in the crude oil market. You know, going back to here, let me pull up the 4. So for all this time, August 20th, that can't be August 4th, 5th, right in here. So almost 3 weeks of just ranging. You know, there have been a few candles that look like we're breaking. It is very, yeah, it is very messy, but I want to see what happens up here if we could get a new high. So we've had successive new highs in S&Ps, and we haven't gotten them in crude oil. And maybe that's part of, besides dollar weakness, part of the extra weakness in USD CAD. Yeah, it looked like it tried to negate the breakdown twice, and here we are testing the lows, excuse me, and not confirming. So I still think it's in an accumulation phase. You're going to have to be patient here. See, even the 2 hour down here. And I drew this line here, a kind of a speed line. Let's see where it comes in. Looks like it's going to come in around the 131.20 area or so. So we're not that close, and we're not going to confirm this low on this time frame. Let's take a look at another couple time frames. There's a 15-minute. We're not confirming right now. 1 hour. Hanging by a thread. 2 hours diverging. 4 hour pretty glaring divergence. And then here's your daily. Daily doesn't look that great right now, right? But I favor it. Greg showed a very bullish correction that could have a bullish note. Zoom's having problems. Don't log out. Okay, thanks for the tip. I usually never log out until the end of the webinar. Just one observation, and it's been going on for a while. They're both commodity currencies, and maybe it speaks to the relative weakness of Aussie, US dollar, not making new highs again, with Canada making new lows for the correction, which gives me confidence to try and sell Aussie. Look how far away we are from last week's highs, while Canada is taking out last week's lows. Although we're starting to get a little pin bar here. I can't get bearish Canada down here. Plus, this is going to be a risk off, part of a risk off move. And so that's my view on everything. I believe that I've covered everything. Oh, okay, one more. I'm short Euro pound, and the reason for it is I know we had a nice little reversal, I think last week. Let me move you guys. But you see how we're just starting to, you know, this was 61.8 back of this break, and then we couldn't do it again. And we just start heading back towards this support here, back under 89.40. You have, this is 170 pip range. So under the low we had from Friday's low, you could subtract 170, which is going to give you about 87.70. I have a lot of confluence on weekly moving averages coming in, just a shade under 88. Okay. You like it for a long? Okay. And gold, all right, just, you know, I guess I'm not going to leave much for gold. Looks like we could rally back to maybe 1980. Let's see what it does here to see if this is real. maybe up to 80 before we get another break. We start closing back over 80, I think you're going to have a better shot, potential shot for new highs or challenge of the highs. So 1980 looks big. See this candle here? And it kept trying to hold it, broke through it. So 1980 is a big level for me in gold. Any questions? Looks like a hand and shoulder. You mean head? I put my hand on my shoulder because my rotator cuff bothers me in humid weather.
Hey, mine too.
I bet you too?
Yeah, mine too.
From doing those pull downs all those years, So, I do believe I heard lifting many years ago, but I hope yours feels better, and it's better to, and I'll look for a hand and shoulder formation in the market sometime today, and I'll take a shot. I'm not making fun of you, Amira. Okay. Yes, Forex.
Dale, it looks like it's going to be me and you today. Steve and Blake and everybody else from our side are having trouble logging into Zoom, and apparently quite a few of our clients are actually having some trouble logging in. So I'm gonna start off, and then hopefully if they manage to log in, then somebody can take over. Otherwise, it's going to be like 40 minutes of macro for you.
Well, yeah, we could talk. We get the attendees involved too. Yeah, I wonder if my guest is going to be able to make it in here today too. Okay. Yeah. So Zoom just in such demand, they had such a growth spurt with the pandemic. I think they're having troubles handling all the demand.
Yeah, maybe. I don't know, but there definitely seems to be some kind of problem today. But anyway, it's okay.
Right. So any big news that you're paying attention to?
Well, let me grab the screen.
Sure.
Share screen, continue. Share.
Okay.
You can see me? Yep. So the main event is a Jackson's Hole symposium this week. We're all waiting for Powell to see what he's going to say, and we had the discussion with some friends of mine about markets in general, and they're saying, look, what's happening? We have equity markets, which basically, if you didn't have any COVID whatsoever data, any COVID news from January, nothing. If the market was as it was, if the global economic situation was as it was before December, if you remember, the markets were turning down a little bit, leading indices were lower, PMIs were turning lower everywhere. And then COVID happened, and we obviously had a big leg lower in pretty much everything. And then we had this massive snapback back and beyond, above and beyond the previous levels. So my friends are saying, look, what's happening? If we didn't have COVID taking us down and up again, we're still way above where we were before, which was, by the way, a turning point for the global economy because things were starting to look a little bit sour. So, and I say, look, you're absolutely right. The only difference is we have quite a few trillions of stimulus in the worldwide. So that's the big difference. And I've been saying it for a while now. I think equity markets are overvalued. I think we should have a leg lower, but this huge stimulus and huge increase in money supply, it's going to have a long-term effect on asset prices. That's basic maths. I still stand by my view. I still think we're going to see a leg lower, but these markets are just going. And like I said on Friday, I sometimes miss markets. You miss trades. I've had a bearish bias in stocks for a while now, but I haven't gone short. I haven't gone long either. So I've missed this move, and it is what it is. I missed it. I made some nice trades on other stuff like silver and Norway, but this one I've missed, and I have to admit that I have missed it. Although I still, as I said before, I still think we're going to see a leg lower. The main thing to realize at the moment is that the Fed and major central banks, but really the Fed controls pretty much every market now. Now they increase money supply, they increase stimulus, risk assets go up. That's, that's how it is. They decrease stimulus, or they do they hike rates. We laugh at this point, hiking rates. But they hike rates, or they do any quantitative tightening, and then risk assets theoretically are gonna come back a little bit. So, and this obviously is completely opposite to what we know or what we knew up until the mid 2000s. It used to be the economy goes well, you hike rates, and stock indices go up. The economy goes down, does badly, you cut rates, you provide stimulus, stock markets have to correct lower. But this is no longer the case. So, to cut a long story short, I think Jackson Hole and Powell, Chairman Powell in particular, might give us some reasons to have a clear view on what's happening. But at the moment, I am personally very confused, and I don't have a firm bias on many things. And you can see that, if you're a ForexAnalytix subscriber and you look at our traffic light page, the macro column, most of them are yellows, because obviously I have a few here and there, but most of them are yellows because I don't know. Is the answer. I don't know. I have no clear view, and until there is a shift or a confirmation, or there's a vaccine, a COVID vaccine, and things are going to be perfect and there's no reason to worry, then okay, we'll consider. But until then, I'm not sure. And this is the Dixie that I had drawn some time ago. I thought we were going to hit this trend line and rebound. We have gone lower. Still wait to see. These are weekly candles, so this is a long-term chart. I want this to be confirmed. We might test this line again and then drop. Either way, it's either going to be a false break or we're going a lot lower. So my view is that because I expect some kind of a leg lower in risk, I think we're going to see the dollar squeeze a little bit higher, go towards 100 or something like that. But that has to coincide with risk aversion. So that's my view on the dollar. Now we have I can answer some questions if people are oh, hold on. Do we have? I can't see the questions on Zoom actually from here.
Okay. I'm reading them.
If somebody was asking metals, I can start from there. So
Mira is always asking about the metals.
Yeah, it's worth watching the metals because they're one of the few things that are really moving these days. And if you look at gold or silver, well, gold broke out all-time highs, and it's gone and retested the previous highs of the late 2011, the previous all-time highs. We went up to 2080 or something like that, went back. Actually, on a intraday basis, we broke quite a bit below the previous all-time highs. So that was a little bit of a bearish signal. People were talking about it. Oh, this is broken back down. You have to go short. And they've been cleaned out because this is bounced again. I think we're in a consolidation mode. I think we will get back towards 1800 if we get. Excuse me for 1 second. If we get a leg lower in risk, I think we will definitely revisit 1800. But I'm looking at metals on the long side, and I have done for a while now. So I'll be looking to get long gold at around 1800. Silver is a similar story. Silver actually is trading very technically. There was a zone, I'd marked this from ages ago, this zone around 26, 27. This was the last level where I took profits on the last quarter of my position. I still have a quarter left. Just below 26, I took off the third quarter of my longs, and I'm waiting to see what happens. Look at this. This is just coiling inside this zone here. It's trying to break out. I still think we're going to see a leg lower, and I'm really hoping we get somewhere near 21 or 22 to get really long again in silver. And again, my friends ask me, why are you so bullish gold and silver? Well, it's economics 101, mathematics 101. You call it what you want. When you have a finite asset and the money supply increases exponentially and it's dollar denominated, it has to go up unless supply and demand characteristics change. Obviously, if these change, it's a completely different story. But I don't see the supply and demand in gold and silver changing materially. There's nothing different about them from the last decade or two. So I think money supply is the main driver. Sorry, let me just close the door because my dogs are shouting.
Okay, buddy.
Sorry. Okay. So that's my view on metals, and it's remained the same for people who have been following me for the past few years. And silver specifically, I went long around 14, 15 or something like that. I can't remember exactly the average. And I waited nearly 2 years for this to happen, but no, it did happen. I was very happy about that. Now, equities.
And when you have a chance, Stel,
Yes.
we're getting a question from Charles to see if you have any view on EM currencies.
Oh, emerging market currencies. I have to say I've never traded them.
Okay.
So emerging markets are very difficult. Yeah, they're very difficult for me. I think emerging markets currencies are risky because when you do get a risk off leg, which I think we will, they're going to get smashed. So same with commodity currencies, but I think that they are just on steroids. So I'm very, very skeptical about being long emerging market currencies because I do think that there will be, we are of a stretch, there will be a leg lower. And when that happens, I think EMs are going to get destroyed. So, but to answer your question, I've never traded them. So really, I don't know.
So
the most exotic stuff I trade is something like Norway, and
okay.
So equities, we're at all-time highs in the S&P. Hooray! Every short has been taken out. People now saying, excuse me, just for a second. Can you go, please? Thank you. Sorry, I have 2 dogs and 2 kids who completely all the time try to interrupt. Okay, so we've taken out all-time highs, and where do we go from here? Shorts have been squeezed for quite a few months now.
Yeah, who's still short now? You have to ask yourself.
That's a good question. What I think is happening now is people are realizing these markets are only going up. End of story. I've seen quite a few bears, long-term bears throwing the towel. And now I think everybody just knows that we're going higher, which is the reason why I think we're going to go lower. And where do we turn? I don't know. 3,500. Who knows? I have a bearish bias. I'm not short. Haven't been short for quite a while, and I've missed this move. But this is how much higher do we go? I don't know. It's a good question. I think Greg had a count which was taking us to 3,500 or something like that.
I think it was 3460.
3460, maybe. Yeah, I mean this.
Yeah, last week. We're we're a day away.
Oh wait, yeah.
From that, yeah.
Yeah, it could be. Yeah, this and the DAX. Have I updated my DAX chart? I don't think I have in a while. Now that's can go away. DAX is still not at all-time highs. Why can't we get all-time highs in DAX? We can. And what's going to be the trigger?
Why they're not making new highs with the U.S.
Good question.
I mean, why are they lagging?
Yeah, that's a good question, actually. I don't know the answer.
Okay, I don't either.
So, I think the timing-wise, it's gonna have to do with the U.S. elections. We are running. I personally think we're running on fumes here in equities, and we are getting close to November. If the U.S. elections go through, which I think they will, we're going to have some kind of trigger. We were saying this last year as well in December. We were saying with Steve, these equity markets are overstretched. There's going to be a trigger. We didn't know what it was, and we got COVID. So this time around, again, valuations are a little bit extreme. You see companies like Tesla, which is insane. It's I'm a car nut, and I've been following cars for years and years, and it just makes no sense to me. But what do I know? So I think going into the U.S. elections is probably the time when we're gonna get a trigger for a leg lower. How much lower? it depends on what it is. You know, you're just trying to guess at this point. So unfortunately for equities, I can't really be very helpful to people, because people ask me and I just say, I don't know. That's why I hold no positions. In terms of currencies, DXY we saw, which is basically 50% euro dollar, so that's pretty much the same. Euro sterling is one I'm watching. I want to get short if we reach again the 92, 93 level. I still think that there will be eventually some kind of agreement between the Europeans and the British. As I said on Friday, I think that this is like a divorce where you're in court and trying to settle the financials and the assets. You know, I want this, no, I want part of your fishing waters, I want this, I want that. Eventually, they're going to agree to something and part. So that's what I think. And either way, when we get to the end of the year, the uncertainty will be gone. You know, is it a deal? Is it a good deal? Is it a bad deal? Is it a no deal? It will be gone, and then we're going to be saying, okay, this is where we are, step 1, step 2, step 3, this is where we go forward. And that in itself, I think, is going to be enough to take away some of the pressure on sterling, which has you know, been absolutely destroyed since the referendum. If you look, this was what was it, 2016, wasn't it? We were around the high 70s, and we went up to 90 something. And you know, it's funny because the UK moving out of the EU, it affects both sides. Obviously, it affects the EU because the second largest economy after Germany, same size I think with France, which is the UK, moves out. That's a big hit for the European Union in terms of GDP, in terms of production, in terms of everything. So this is not just something that the Brits will have to face. Both sides are going to have to face that. And remember, the UK was a net contributor to the EU in terms of you know, financially. So I think the pound has taken a big hit. It could get another leg lower as we get into December. I hope it does, because I really want to sell euro pound at around 92, 93. That's just my view. What else? My favorite, Norway. Okay, I haven't updated this chart in a while, but let's get rid of this. This was a remarkable spike in March due to COVID, and the commodity currencies, they always overreact when risk gets sold. Always. And you have a currency like the kroner, which you know, Norway, I've said this so many times, you know, people must be sick and tired of hearing it, but it's such a well-run country. I have a few friends who live there, and it's such a well-run country, and you know, things work. They have a $1 trillion sovereign wealth fund. These people were not stupid. You know, they were putting away all the benefits from selling oil, while now slowly moving out of oil. You know, they have this I think they've given a name to it as well, but they have this project where they want to be moving away from fossil fuels, just like the Saudis are. But they have been putting away the money. They have $1 trillion for, what is it, 5 million people. So that's a pretty good piggy bank for a rainy day. And they're also invested, the sovereign wealth fund is invested in equities quite heavily. So, you know, they've done well. And this currency is one which I really like to buy on dips. End of story. The one I've been short, and I still am short, is Euro Norway. And you know, at these spike highs around here was like a gift to get short. Also, you had positive carry at the time, because Norway rates were not at zero. They are at zero now, but they were not at the time. So it was like a no-brainer for me. And I'm still holding this. And look, this is just consolidating sideways, you know, spike up, spike down, consolidating sideways. If we get another risk off leg, this is going to go up towards, I don't know, 11 and a half. I'm going to be selling up there. You can be sure of that. And it's just something that I like trading. And I've traded Euro Norway shorts probably 10, 15 times in the last 2-3 years. And, you know, it's something that I really like.
You know what?
Blake is in the house.
Hey.
Hey, so just so you guys know, we've there's some serious Zoom issues going on with and it's like not just us, it's everybody. It must have happened right at the beginning of the hour, because I was actually, a little late to log in, to try to log in. And I got denied, and then and Steve did too. And so Steve's logging in. We had to go like through some back channels to kind of log in. But anybody who's a host for the Zoom calls right now, it's like a global like crash. So,
Blake, they seem to have made some. Our developers found they seem to have made some backend updates yesterday, and as it seems that broke the system somehow.
yeah, and it's
Fire
not. It's
them.
Yeah, the thing is, it's not like you guys that are listeners. You guys are fine, because it's not affecting you. It's people who are hosting, who have our account holders. Yeah, we can't log in, and everybody's account says that there's no payment found. so you log in, they're like, nope, sorry, you can't log in because there's no payment found. But it's not. It's like if you go, Steve was just on, finding out via Twitter. There's like, teachers that can't log in. I mean, it's everybody. It's a global issue. So anyway, so I'm glad that Dale and Stelios got logged in early, because it must have happened just a few minutes after that. So I thought I'd take this moment before I pass it over to Steve. I kind of go over what I'm seeing in the market really quick, and then I can pass it over to you, Steve, so you can give your thoughts. So you guys gonna give me about 15 minutes, and I can do that.
Absolutely, mate.
Okay,
Go, bro.
All right. So let's really quick. What I figure I do for you guys is let's get this bias chart done. So the first and foremost, the euro is bouncing. We're at the 38% retracement. Remember, and this is one of the important things about the euro bouncing right now. Just remember, the dollar had a false breakdown and the euro had a false breakout last week. So we are getting a counter trend of that move, if you will. So if you go back to the euro and you're like, okay, well, we had that false breakdown, I would expect that the euro is going to find some resistance soon. Intraday, we've already been to 118.50. I think any move back up to the 50% retracement, 118.60 is going to give us some resistance. So, and I'm going to keep us in a bullish trend for now, but just keeping in mind that I think that you're going to have some two-way action here the next couple of days. So just, think about that for a moment. Support, any dip down to 117.50 is probably going to offer some pretty good support today if we should get down there. And just so you guys know, one of the reasons why, stocks are so much stronger this morning, it's all, the virus hopes, which I think is kind of silly, because first of all, the U.S. is trying to fast track the AstraZeneca, which is a European, I believe, out of the UK virus vaccine. But if it's fast tracked, most Americans will say, well, I don't want to. I'm not going to take that, at least not right now. I'll wait. And that, so I think it's kind of self-defeating. I know a lot of this is all political. You want to get it. The Trump administration wants to get something out before the elections, to help, secure a win. But I don't know. I think it's going to be a little bit challenging in that respect. So for people to adopt any type of vaccine if it comes too early and untested. So anyway, so just that's why I think that's why stocks are higher this morning. One of the reasons why, and then we know also this week is as I explained on the week ahead video, is the big Jackson Hole Symposium. So obviously people are looking at the Jackson Hole Symposium as being a key event that's going to help drive stocks a lot higher from current levels. So anyway, here's the cable, and I'm gonna tell you, the cable I think is a little weak. It's just really underperforming here. Support being right now 130.55. That's going to be the lows, or I guess we can probably call it this recent low 130.65. Really. And you know, while the cable's trading below the 132 level, I'm a little nervous, and I think that yeah, we could rally, but I think this 131.85 is going to offer resistance. So, and I'm going to keep us in range right now because the pound's actually looking a little bit weaker than the rest. The Aussie. So this is the channel that we're following. Obviously, support down here at 71.40 is key. I'm going to still keep it on bullish just because, look, stocks are higher this morning. And just so you know, we're challenging that 34.20 level that we talked about over the week ahead video. But the Aussie, the only thing that's keeping the Aussie higher right now is equities. That's it, in my opinion. Now, this failure here must have been at a 50% retracement, and it was. So the 618, 72.23, 72.25 is resistance now. Kiwi, you guys know I'll just write this down. So 65 cents. Here, we'll do this. I think that's it, right? That's it. That's the Kiwi. I'm just doing this for you guys quickly. 65 cents, right? 66 cents, which is up here once again. If you guys watch this every day, then you guys know the levels are there. Yeah, I would say any rally back to 66 cents is probably going to find resistance because that's all these highs right over here. That was the lows right here after we got above it. So yeah, any move back up to 66 cents. And let's go to the Canadian. So the Canadian just bounced like a bat out of hell. It was just literally down at the 130.30 support, which, you know, if you use ForexAnalytix, you know, you were notified when it's back down there. You know, the Loonie is finding support ahead of the 31.30 lows that we carved out last week. 132 level remains resistance on rally. So I'm going to just write that for you. But you can see we just bounced like pretty aggressively from down here. I mean, that in itself is just telling you buyers are lurking down below the 131.50 level. So 131.30 is really key support. Okay. And then obviously any move back to 132 is going to find, you know, resistance. And actually, you know, we could probably say 132.25 because that's going to be that trend line up there. Okay. Dollar Swiss. So Swissy is trading heavy, but I think if I'm not mistaken, yeah, we're going to have a lot of support. Any move down to 90.50. So I think that we're doing, you know, we're making some sort of triangle here. So any move down to 90.50, I'm going to call it actually 90.60 is going to be supported. We are still in a bearish trend while we're below. We are still in a bearish trend while we're below the 92.40 level, but I think this is 91.50 should offer the top end of this range. Okay, for today. Dollar yen. So let's take a look at the dollar yen really quick. So the dollar yen is just range bound. I hate the dollar yen at this moment. I say that because it's just not, I just don't know what to do with it. Maybe that's the better way for me to explain it. It's just, it's a tough currency to put your finger on right now. You know, support is going to be at 105. We're just going to call it 105.30 again. And resistance now is any move back up to 106.50. And I think we've been writing that down for a couple of days now. So 05, whoops, 530, 106.50. We're going to keep it in range. Dollar index. Again, false breakdown from last week. Don't forget about that. 92. So right now, 92.50 is offering support. Resistance is at 93.50, 93.45. Hey, Dale.
Yeah, buddy.
Oh, I heard you clearing your throat. So, we're still in a bearish trend with the dollar index, so just keep that in mind. Let's go over to the dollar mix. Just trying to get this done really quick before Steve gets here. So obviously a lot of key support down here. 90 or a 2190 is mega support. And the 78% retracement actually is what supported us last time, and that's going to be at 2185. So if we can basically get down to 2185, it's going to be a really big support. We are range bound. You have to keep in mind that the dollar max is not, I mean, we may be trading a little heavy. That's just because stocks are stronger. But in all actuality, the dollar max is really performing quite well based on where stocks are at. I mean, with stocks at all-time highs and carving out new all-time highs again today, you know, the dollar Mexican peso is holding up very, very well. That's not to say it won't eventually break lower. I think that what most people believe is they think it's just going to continue to break down. It's going to just play some catch up, but you know, it hasn't yet. So just, you have to keep that in. That always has to be in the back of your mind if you're trading the dollar max on the short side. And you can see we're challenging this, you know, trade right here, or this this trend line right here. So resistance intraday will probably be right back at 2201 for now, but or 2202. Remember, that was support last week, and then in the event that we rally, whoops, 2225. Okay. US dollar, Norwegian krona. This pair is actually holding up pretty darn well, and I was hoping we'd get a move a little lower than we did. I was hoping we'd get a move down to 895. If you know, on ForexAnalytix, even the analysis is here. We could retest the broken trend line at 895 level before bouncing once again. Okay, and we basically went to 895.72. I thought we'd get just a little bit lower. I actually I had a bid out there. Didn't get tripped, obviously. So and we bounced. We're already bouncing. So 895 is going to be support. Oops. And then resistance is 905, 906. I'm taking us out of a bearish trend because we are above that trend line. So we are staying in range now. So that's a big deal. You know, it's a shift outside of the range. Okay. I'm going to do gold and S&P really quick, and then I'll pass it over to Steve and Stelios. And Stelios, thanks for taking the reins earlier today. I know it's, you know, with having all these Zoom issues, it's such a pain in the butt. Okay, gold. So gold's rally seemed to be very short-lived here, which, you know, look at how we cannot take out even those highs from, you know, late last week. I mean, we took it out, but we can't sustain. So that means that this 1960 level is resistance intraday. But I'm gonna say that we're still bullish. But if we break through 1900, you know, we're going to go into range. So just keep that in mind. This is really key support now. S&P. Here we are. Okay. So you take the S&P here. This move, we're at the 161% extension. which is at 34.24, 30, and we surpassed it just slightly. But remember, if you guys watched the week ahead video, I said, be careful being up here. It's a trap. Remember? What Admiral Akbar. Do you remember that from the movie, you guys? It's a trap. Nobody? Nobody?
What movie?
Star Wars, man.
Oh,
Admiral Akbar. The guy looks like a big squid.
oh boy.
Gosh, you guys are killing me. Well, at least some of our yeah, squid or fish. At least some of you guys remember it. Some of you, jeez. Anyway, so what I was suggesting from the week ahead video is we're going to come hit this 161% extension, but ahead of the Jackson Hole Symposium, I don't know if I'd fall for that. And then if you have, you know, the NASDAQ, same thing. We're at the 161% extension of the post-COVID move. Think about that.
Wow.
Here's the COVID sell-off. Here's the 161% extension. We're basically there. Being long risk right now, ahead of the Jackson Hole Symposium at these levels, no thank you. You know,
Ziggy tweeted a picture of Admiral Akbar this morning. If you want to.
Oh,
show
did
it
he?
to the crowd. Yeah, it's on Twitter.
I missed it. I probably
right.
because we were dealing with this whole issue thing.
Yeah.
So let's say 34.25. We're still bullish, obviously. I'm just warning you guys. Just got to be really, really careful up here. And support intraday will be back at 3,400. Right? Oops. So I'm going to leave it there for you guys. And Steve?
You're an evil person, Blake.
What?
You just want people to get rid of their Tesla longs so you can buy it on the chip.
That's
Just above
right.
2,000.
That's right. I'd love to buy Tesla at 2,000 because I think that's a great deal.
Yeah, it's only a few thousand times future earnings.
Wonderful value opportunity.
Isn't it worth more than the market cap of you know, GM and?
Oh no,
Ford
it's
Fiat,
worth
Chrysler?
more. It's worth more of I think all the
Auto
car companies combined, and
Right.
and a lot more than that. So yeah,
It's crazy. It's absolutely berserko. Anyway, Steve, I hope you had a great weekend. I hope you had a great break. And I know people want to hear from you. So, and I know a lot of our traders had missed you this last week. So I'm gonna shut up. I'm gonna pass it over to you guys. But it's nice to hear you again. And Dale Stelios, thanks for covering while we were trying to get logged in.
Stel did great.
Yeah, he did. So it's all yours.
thank you, mate.
Welcome back, Steve. Have
Thanks,
a good
guys.
one, Blake.
Thank you, Dale. Let me grab the screen. There we go. So let me open the chat box. And still, are you here? It's awfully quiet.
He was so exhausted for talking for 20 minutes.
Yeah, he actually isn't. So if you can, Dale, you'll need to help me because as you know, since we logged in with Blake later trying to solve this issue, I can't see all the questions that came up before I logged in. Anyhow, I'm going to start by going through a couple of things. Anyhow, I know more or less what Blake covered because since he does on a daily basis now the bias chart. So I'm going to start by covering a few of the rest, and then we can go through some questions. I do see there is a question about natural gas and platinum. Yeah, I intended to start from these type of assets, and then we're going to go to some FX pairs as well. So here is crude oil, by the way. The weeks are passing, and crude oil isn't really changing the tune. We're still drifting higher within this, ascending wedge. I still think there is a chance that we can. I just have to keep moving the lines because nothing else is really changing. I still think there's a chance that we can see another false breakout higher. I'm assuming a lot of people might, attempt to chase it. And I think that, that if that's the case, that's probably going to be the wrong move. because I think even if that's the case, we're going to see a very short-lived move.
Ever see this kind of dormancy in WTI?
In
Tightness of
WTI,
range?
yeah, we have had periods in the past that it was
Yeah, I guess
dormant.
so.
There is one, for example, there.
Yeah, I guess, yeah.
Yeah, which is somewhat of an equivalent formation. We also had some periods of dormancy when we were trading within that larger triangle before the first big breakdown. I still remember this in 2004. That was the first violent move lower after a long period of consolidation in that triangle.
Okay.
The previous breakdown was more or less expected, and people weren't surprised because it coincided, of course, with the financial crisis of 2008. So everybody was like, okay, yeah, sure. I mean, crude oil demand is plummeting, due to the financial crisis. So of course the price is moving lower, but not nobody, that's not the right wording, but a lot fewer people were actually expecting this breakdown that happened in 2014 because there was no real market turmoil back then. So I think that this period of dormancy is going to be resolved once again with a period of probably a violent move. And as I said, I wouldn't be surprised if for a few days that starts higher and then completely reverses and becomes lower. What I did do like an hour ago is that I did book profits on my long natural gas position. I made 20% on that. So, that was quite good because I had like almost 10% losses on the stock indices shorts. So, that was a good trade. And, from a technical perspective, as I was saying for a long period of time, it was an easy trade because we had a very, very well-defined rectangle. We broke higher. In that case, you have to respect like the technical breakout and you go with it, and you hope it plays out, and very frequently does, especially the longer the period of the time you spend consolidating in a very, very well defined range, the better the breakout becomes. So we had this very nice move from 205 to 250. I still think that natural gas can keep moving higher, but I have no reason to press my luck because we've now almost completed the rectangle's implied target, and we've reached this confluence of resistances. So I'm out of this. I mean, I really have no reason to press my luck. Now, having to do with gold and silver, I wrote in the weekend analysis, there are two ways we can move from here. One of them is that we can end up seeing another leg lower, and it can actually, end up being rather sharp. So, one leg lower, another leg lower at the very least. Equality target, for example, in the case of silver comes at $22. Equality target in the case of gold, I haven't actually calculated that. So let's go ahead and do it. Comes at 1,803. Anyhow, my target was all along roughly here, 1810 to 1820, so a little bit higher. So that's one possible way that we can resume from here. There is a second one, and that second one is building a larger consolidation, between the all-time high and the recent low. So, there is also that possibility to see, something like this forming there. So, completely vague at the moment. As you see, I'm not even, using more than 1 point. I'm just giving you a general idea. This is not a technical pattern I'm currently drawing. I'm just drawing a possible move forward in the development of a larger technical pattern, right? So these are the two ways I see. From a risk-reward perspective, it would still make sense for somebody to want to be short against the recent highs. I mean, in the case of gold, I'm talking about this high, 2010. In the case of silver, I'm talking about this spike higher at like 28.5, more or less. So in both cases, from a risk reward perspective, even shorting here against these levels makes sense. As I've explained multiple times, I don't want to be short. So I'm not telling you what I'm going to be doing, because that's not what I'm going to be doing. I'm just saying that if you really, really want to be exposed in the short side, this is what you can do. Now, having to do with platinum, it's interesting how platinum found support in this ascending channel once again. So, as long as we're holding this channel and the 870 support resistance area, there's no real, technical argument to be bearish. Palladium still building this longer term symmetrical triangle, most likely. Within this larger symmetrical triangle, you can clearly see that there is even a smaller symmetrical triangle, right? So it's a symmetrical triangle within a symmetrical triangle. There it is. So I think it's going to be interesting when we finally break out from here. Probably it's going to produce, quite a noteworthy move. Copper, definitely finding it quite difficult accelerating to the upside, but that doesn't change the fact at all that copper has now completed from March to August, and more or less the same dates, 5 months appreciating within this channel. So, you have to respect the upside as long as this channel is holding. Now, I do believe that once this channel breaks to the downside, let's say roughly 285, that's going to be an indication that a deeper pullback is coming, in which case I would be looking towards 255. But it's very likely that after a deeper correction, copper is going to go bid once again. Now, having to do with FX, as once again, I'll have to start from the DXY. The DXY definitely displays still this, clear RSI divergence. You can easily make the argument that last week we had this false breakdown from this range. I'm assuming that a decent amount of people got trapped being short just before it reversed higher the previous day. Having said all that, there is no real argument to be made. I mean, there is an argument to be made that perhaps we're about to reverse higher, but there is no tangible evidence of such an event as long as we're trading below 94. So, you can make a lot of assumptions about when the DXY is going to reverse higher. Some of you might be looking like for a big move higher. Personally, any type of a rebound, I'm going to consider that corrective. But before we can even talk about a corrective move, 94 needs to be taken out, and bulls have a decent amount of work ahead of them in order for them to do that. A false breakdown can frequently be an indication that we might see the exact opposite move unfolding, but we're not seeing that yet, right? So hold your horses. I personally, I wouldn't be jumping the gun here. I mean, for example, USD NOK has been already showing the intent. Whoop! I didn't mean to do that. To turn higher, this is the channel I am monitoring in USD NOK. I'm still short USD NOK, by the way, and very, very much into the money. I could easily, take profits here just by claiming, okay, we're breaking through this channel, so something is changing, and yeah, it might as well be the case. But I'm, so deep in the money, and I'm personally, from personal perspective, I'm so convinced that any rebound in the dollar is going to be corrective that I just want to hold my position and increase it, at any decent rebound. So, it's a matter of what kind of time horizon you have. Of course, if I was a short-term trader and I wanted to be on a trade for like 2-3 days, I might as well do that. But no, I don't want to do that yet. USD CAD, by the way, USD NOK is breaking through the channel. USD CAD isn't doing the same thing. Still consolidating on top of the 88.6% fib from this low, which is the yearly low, to the yearly high. Now, momentum has, clearly waned. RSI is clearly diverging, but no, thank you. I'm not going to take the other side until I see, a decent move higher. And, for me to get convinced that there's going to be a decent move higher, I want to see at least a couple of very, very strong days. Very strong days. Until that happens, go ahead, Dale.
Oh, I was going to say, Steve, that Canada chart, and it is interview time. That whole decline that you were showing in Canada, doesn't it? I don't see anything impulsive in there. Do you? All the way from the top, it's like a grinding.
Yeah, it is a grinding.
Is it a corrective? Does that give you any bias that this whole thing could be corrective and we should be looking for longs?
Initially, I was almost sure that this move is corrective. Now, the deeper it goes lower, the more I'm skeptical because, there is so much that Canadian dollar weakness can do against US dollar weakness. And I'm seeing a lot of signs that the USD dollar might not be about to stop depreciating. It might do so temporarily, of course, but I'm talking now medium term, but it might actually be in the precipice of really breaking down and showing us what a real depreciation is. Because so far, yes, the dollar has lost a decent amount of its value, but in a very orderly fashion. But you know very well from experience that sometimes very big moves begin with an orderly move before they become disorderly.
Well, I think that formation, that triangle that it broke down from 38 measured 130. So we're not quite there yet. That was
my intuition tells me that we're going to get at least a decent dead cat bounce from USD CAD as well. So I do think we're getting closer to the point that somebody will be able to make some money being on the long side.
Yeah.
So I'm 100% with you there, but I don't know if, how much that's going to be worth. Yeah.
Okay, buddy. Well, it's great to hear your voice again. I'm glad you're back. Hope you had a good trip.
Yeah, we did our best. We had quite a lot of work with my wife, but at least we were on the sea. We got to swim a little bit.
Beautiful pictures. Nice place.
Yeah, Greece is beautiful.
All right, don't rub it in.
Yeah.
Oh well, San Diego.
You know that you have
see it.
You know that you have an open invitation, so don't blame me.
Not from the government.
Yeah, but that's temporary.
All right.
Worst case scenario, I believe by next summer, it's going to be okay.
If I don't blow my brains out, okay. Anyway, I'm going to bring.
We're going to keep you sane until then. We're going to keep you busy and sane.
I have no idea, bro. All right, I don't know how I made it this far. Anyway, welcome back, Steve.
Thank you.
All right, Anthony, I'm going to get you set up.
Who do we have
Looking
today?
Forward to Anthony Ohayon.
Okay.
So, welcome back, my trading warrior brother. They're trying to. I don't know why the unmute isn't coming in.
Sometimes it takes a few seconds, so give it a few seconds.
Okay, all I have is the more button coming up.
Yeah. I've noticed sometimes it takes a few seconds, depends on, the guests. Oh, there it is, you see?
Oh, yes.
I unmuted him.
Okay.
Hopefully.
Hi, Anthony. Welcome back to Face.
Hey, Dale. Thanks for having me. Could you hear me well?
Yeah, loud and clear, my trading warrior brother. So do you remember how to share here in Zoom?
Yep. Let me get to it right now.
Okay. So how you been handling all this surreal COVID, surreal political situation in the U.S., unprecedented declines in stocks, and then an unprecedented comeback in stocks? Wild days, huh?
Very crazy. I'm just wondering if you're able to see my screen yet.
No, not yet. You have to click the share screen, green box.
Yep. Yeah,
and then you'll get another screen that's going to ask you to select either a window to share or a whole screen.
Okay.
There you go. Now we do.
All right. Awesome. Okay. So you're showing the S&P here.
Yeah, SPY. Just to
Okay,
make
and
it
you have some, the first time it was bigger. Can you do it the way you had it the first time? It filled
Yeah,
up the whole screen.
I can do that. Sorry. Yeah. Just
That's
I
okay.
have my setup on my big monitor for trading I just got, so
Okay.
probably why it's not looking as big over there. But
So did this rally surprise you that we made new highs after that crash?
I got to be honest, I really don't think it did. I've
Okay.
been calling for, last time I was on the show, I think I called when we were about 2,800. I was saying 31.36, and then the action when we were there made me think we were going, way higher. So I figured since when the NASDAQ was breaking out, when S&P was just getting back to that 31.36 and the NASDAQ was going over highs, I figured we would keep running. And I actually think we still keep running for a decent bit here.
Okay. If you can enlarge that chart, we can be able to see what some of your numbers are. Otherwise, I need magnifiers.
Could you?
Right now, it's showing up as a big rectangle that doesn't fill up the whole screen, just the middle of the screen. The first time you showed it, it was perfect.
The first time I showed it, okay.
Yeah, it was a full screenshot.
Let me get here going. Is this better now? Are you able to see it now?
I don't see anything yet. You'll have to, resume share, new share, and then resume share.
Let me see here. Sorry, share screen. This should be, there we go.
There you go. Okay.
Okay, perfect.
All right. So now we see this almost like we have a continuation. Anthony, would you interpret this as still as a broadening top where you had like 3 drives down at the bottom, and now we're headed towards that megaphone line, a couple lines you have up there? Almost looks like it's a continuation. Maybe that's why it's just so hard and wild to trade this stuff, because broadening formations are the toughest, because you get people bullish near the highs and you get people bearish near the lows. So you're looking for this spider 35.56, 355, 361. So we still have what, about 40 handles or so that we could rally into this zone here?
Yeah, I think so. I mean, so on SPX, that's about 3550, 3600. And the way I kind of calculated this is because I used the Russell to figure out when we were bottoming in March, because obviously that was the most impacted. So I can show you my chart on. I'll use IWM just because it makes it easier. But see, I think I drew this last time I was on the show, this little base here. So that was kind of bottoming out while the other indices were crashing. So, as long as the Russell is not diving horribly, then people aren't really scared about the coronavirus as much in terms of the market, I think.
How about when it's underperforming like it is now?
It is underperforming, and it'll continue to underperform, in my opinion, just because, everyone's putting money into tech stocks and these high growth names now, especially with interest rates being low, and you can't really get yield in much other places besides tech stocks and growth as much as you would before. So I think that this is why the NASDAQ has done such an incredible move. So when you see here on the NASDAQ, when it rallied over its all-time highs, it went about 4.4% higher, and then from the top of that initial spike, it went down about 6.5%. So that's kind of what I'm looking to see here, if the S&P can get there, and it actually lines up pretty perfectly with that that megaphone top right there. So that's kind of how I'm going to be trading this for the next few weeks, just looking to see if we can get to the top of this extension. And I drew the double, 2 different lines here. One's a little less bullish than the other, but they're within 50 points of each other. So, I mean, I've been saying 3550 to 3600, and I still think we're going to go there in the short term.
So you think we're about 8 bars away, which is about a month, 4 weeks.
Yeah.
This is a weekly, right? So,
yeah, this is a weekly.
Okay, so you're thinking around late September, we should be there.
Yeah, so I'm actually starting to get a little bit more, I would say cautious. I know everyone's as bullish as it gets, and I don't really like seeing a bunch of the shorts capitulate. That's not really a bullish sign for me. But I do think that, the 3 trillion stimulus and Fed, and then interest rates being zero for the next 2 years essentially is much more bullish than people assume, just in terms of equity pricing, right? Like you can get PE multiples way, way higher off of that. You can get it allows the market room to breathe and grow. You saw that the last couple of years we've been really going nowhere. We weren't really able to get over 3,300 for a while, and that was mostly because of they were raising interest rates incrementally each quarter or two, and they were not really they weren't really adding anything to the balance sheet. They were trying to taper off. So, I mean, that's why you saw that rally from October to February, because you could see they started lowering rates. They started adding more to the balance sheet, which is what drove that rally over to 33.93 before. And so I think that amount of stimulus and that amount of rate cuts is why I think that, everything else being equal, of course, I know that there's a disconnect between the economy and reality in the stock market right now.
I want to ask you how you explain that to laymen that aren't involved in the market. And they say, well, Anthony, I know you have some fans too. I've seen them on Twitter.
Thank
you. A lot of people very proud of you. How do you explain to them what's happening in the real economy, old economy, and what's happening in the stock market? You just say Fed?
I mean, of course, that's the bull case and the bear case is what I've realized. All the bears are saying the Fed's pumping, all the bulls are saying the Fed's pumping. But if in layman's terms, what I'll say is that I know that there's a disconnect between the market and the general economy, but the market's very forward looking. So, we bottomed and began rallying before this was even a little bit over, before the coronavirus even had a slight uptick in being better. And, you could see that here, that this was, March, and we had our peaks of cases and everything around here. So
your time frame has me thinking that maybe a fundamental event to take it up there, we haven't had a second relief package. That perhaps that's what happens by the end of next month, because all the evictions start at the end of September. If there's not a moratorium, and you're starting to see a lot of news play on how people are being affected by not getting that extra $600 a month in addition to their unemployment. So maybe that's the icing on the cake in the next 30 days up there. So I don't know if you look that far ahead, Anthony, but to me it looks like it could be a layup to your levels.
Exactly. Yeah.
All right, so go ahead.
Okay.
What do you
I've been talking
expect
about
afterwards?
this.
What do you expect afterwards? Just a consolidation, maybe range bound for a while, or do you think that the megaphone formation could come into play? Or just a corrective move from this gigantic rally? What do you think?
Yeah. So, I mean, I've been talking about this for a few weeks on my podcast recently, that I think that we're going to go all the way to 3550, 3600. And it's, most of the time, these megaphone patterns, you get a really strong drop off of them. But, the difference in these cases is, right, like here, you didn't have Fed adding to the balance sheet and you had a trade war. Here you had the coronavirus, right? And then, so now I guess it might be a sell the news, buy the rumor of the virus getting better kind of situation. And I wouldn't be surprised to see that around this level. So, I mean, do I think we could go exponentially out here? Yeah, I think it's obviously a possibility. I just don't think people take into consideration too much how strong the rates and the stimulus can impact these markets, regardless of everything else, right? You have the top 5 stocks, the Amazons, Facebooks, Googles, weighted to be 40-something% of NASDAQ and over 25% of the S&P. So you don't. So really
you're open to a throw over. You're open to a throw over above the line. Okay.
I am open to a throw over, and I mean, I give that a little bit less likelihood than I would think. We could go to the top of the megaphone, and into the elections is my only, I guess, concern. I know a lot of people think it's going to be bearish if Biden wins and bullish if Trump wins, but I actually think it's not going to be really bearish regardless who wins. I was doing some calculations and math off of where, all else being equal, I'm assuming that the coronavirus doesn't ruin the economy. And I think things will get better in the next 6 to 12 months. I'm just an optimist, but if that is all like, all else being equal, say we were where we were in February in terms of like economic growth, whether it'll be a supplement from these tech companies making way more money than the small cap value sectors, whatever it is, like the net would be at least the same in my opinion. And I think that would allow us to actually go to 5,000 SPX in the next like year and a half or two. And that's just based off of what rallied from October to February, based off of the amount of adding to the balance sheet and interest rate cuts. So it's kind of
okay. Let's talk interest rates.
Target, but
because I'd say the most universally accepted market narrative is lower for longer, and Jerome Powell saying we're not even thinking of that. Do you trade any interest rate vehicles, for example, TLT?
So yeah, I'll use TLT for a hedge. If I see like, if indices are getting
you tell
really
me
crazy.
If that looks like it's portending lower rates. Let's see it. Do you have anything on TLT?
I don't really,
or the 10-year yield? How about 10-year yield?
Yeah, I don't really trade TLT, but I do think that they're saying that. I mean, I know that people are implying, and rates are implying that they could go negative, which I really wouldn't be surprised to see. I don't think, the Fed will never peg it to being negative. If it drifts negative, then,
No, I'm implying the 10-year yield could go to 120. It's currently at 60.
I could see that. Yeah.
Okay,
I could
so
see that because that's bullish for stocks.
That's bullish for stocks, especially the banks, right?
Yeah, absolutely. I mean, the thing with banks too is that's why financials have been getting crushed. So, if you've got interest rates and that the Fed is obviously in sole control of those rates, saying we're not going to even, as you said, we're not thinking about raising them until 2022. So, that's why the financial sector has been kind of in the rut lately.
Okay, but if we go to 120, doesn't that play into, how people measure valuations compared to 0.60 to go to 1.20? It's like a doubling of rates.
Yeah, I mean, it would be and then people would say, well, there's yield other places, right? So, but I don't think you're going to get that kind of huge rotation out of stocks and into bonds. I think what you'd kind of see more of is maybe a slowdown or a sideways move, but I think that would happen over a longer amount of time. Like, I don't think it's going to go from 0.6 to 1.2 in 3 or 4 months. Like, I think that would take maybe till January, a little longer than that. Because the amount of people in equities right now is almost making me bearish if I didn't think how strong the Fed was.
Okay. Well, a weak dollar has also helped. Give some jet fuel to this rally. Do you have a view on the dollar? Is this a major top? Dollar continue?
I do. So I watch the dollar a lot because I've been investing a lot in emerging markets, just because, a weaker dollar is good for these other companies.
Right.
Like SE is one of my favorites. Wow. And that's very vertical. But if you look at their numbers, it's pretty insane. And I actually don't think the valuation on this one's crazy at all. So I actually posted this one last night where I could see it going. I started using anchored volume weighted average price from TrendSpider, and then I just do a lot of measured moves now. So I mean, one of my big holdings is SC. Another one is, and this is actually my largest holding, is Mercado Libre. I mean, their report recently was just insane. They're basically dominating and taking over all of Latin America in e-commerce, payment processing, and they just started a credit card business, which is, one of the most bullish things you can do for a company that is primarily supposed to be an e-commerce company, but now they're going to own the entire LATAM payment space, which is obviously really underdeveloped.
Okay, that last one looked like a 3 drive to a top formation. I could be wrong, but the previous
on SE?
one.
Yeah. Oh, yeah.
I mean, are you seeing that too? It doesn't bother you at all? Well, maybe it's 2. I'm thinking, the first high in June, second high in July, and what we're doing here. I know you don't use momentum indicators, but I would bet that we're not confirming these new price highs with most momentum measures.
Yeah, I could see that. I mean, also volume has been super low in the summertime. So, you'll have to wait till all the big boys get back and you can see the real volume.
They're not coming back this year, Anthony. Why would they come back from the Hamptons with COVID in New York?
That's true. Huh? Hopefully they can trade remotely. But
they have been, but I always heard myself saying that too when everyone returns from the Hamptons, but they're not coming back. Everyone wants to be in the Hamptons. So But I do agree that there, more flows will come into the market next week.
And there's still a lot of money
Labor
sitting
Day.
on the sidelines too. There was, I don't know at one point, I don't know when that was, but there was like 5 trillion sitting on the sidelines from money managers, and I'm sure it's less now. But there's still a significant amount of money that's not being used because all the people who were short are getting squeezed to Sunday.
Who's still short?
I'm telling you, there are people still short, right? Like there's no. I mean, we're rallying because of the Fed and interest rates, and because people think all these coronavirus, vaccine, plasma, all this great news is making us rally, and the unemployment benefits and stimulus. But there are still people who are short, and I know that the majority of them have thrown in the towel, which is.
I did it 3 times last week, and it actually paid.
Oh, so if you can get a good entry, it'll pay.
Yeah,
it's
it paid.
Long-term
one's 20 handles, one's 50 handles. And anyway, so to me, it was saying, wow, it's becoming more of a two-way market, because normally if I short something like that and I get paid instead of run over, it means something. But I can't short it here because all my RSI stuff has been blown out. We're getting confirmed highs on a lot of time frames. So interesting look on some of these things here. Any view on what's happening in the miners with the pullback in gold? And miners actually were underperforming the physical bullion itself. You doing anything in that sector?
Yeah, so I was playing some GLD calls at one point in the last month or so. But what I do think is that gold has become like the most crowded trade I've ever seen. Besides like the Tesla and Apple pre-split run-ups. But everyone's loading gold. People who I know don't really invest are buying gold. Just like friends of my parents and this and that. So that for me, that was like, okay, well, I don't want to buy.
I know what you're saying. Old people are buying gold.
Yeah, I guess.
The young people are buying Bitcoin. And
that was my next point. Yep.
All right. And the old codgers are buying gold because they could, look at it and touch it. And
exactly. I mean,
it's another generational issue here.
Yeah, I guess it's my fault for being a millennial. But
tell people how young you are.
Yeah, I'm 23. Yep.
All right. See. All right.
Yeah. So I guess I would fall into the millennial or the
youth
younger
is
investor.
Wasted on the young.
Yeah, it is what it is.
Don't you think? No. Anyway, so you've been bullish and right. His Twitter is @AnthonyO'Hyan. So people are asking, even though you've been here a few times, Forex Gal wants to know what your background is.
Yeah, so I've been investing since I was about, I'd say 16 or so in high school. I went to Duke for college, majored in behavioral economics there. So
Blue Devils.
Blue Devils, yeah, go Devils, go. I made that major, and I just combined psychology and like all the finance stuff that I really enjoyed. And then when I graduated college last year, I right away started my hedge fund, and I've been running that for the last year.
Okay. Anything else you wanted to share with us today, Anthony?
Yeah, I do. Go ahead. Okay, yeah. Well, I do see that.
Breath of fresh air. But go ahead.
Thank you. I do think that as bullish as I think we're going to hit this top of this megaphone, I do think that we'll get a pullback down, just like you saw in the Qs. So I am looking to get a little less long ahead of the election. I know that personally for me, I don't think it's going to be bullish regardless of how it plays out. Or going to be bearish. I think it'll be bullish, regardless. But I do think that there's still going to be that uncertainty and that fear, which even if the markets are bullish, that uncertainty and fear is enough for people to get, psychologically compromised and start selling down. So it kind of lines up right with this one period here. And obviously tech is, QQQ is so heavy weighted that, most of this move is Apple and Amazon and Microsoft.
There's no worm in Apple yet?
Yeah, not yet. The thing with these splits is just it's so bullish. I mean, like you saw Tesla run 5. I posted the day it was announced that I was thinking 2100 just because that the psychological 420 funding secured level is definitely on everyone's mind. And if they could get it a second time at 420, they would. And so then now we're at 2100. So it's like 700 points higher. And the thing is, can squeeze so hard. But I don't think Apple, is going to see a dive really until they do the split. And even after that, the thing with Apple is it's going to be $100 or so a share. And the amount of people who don't understand what a stock split is, and they just think, wow, I can buy Apple for 100, is probably huge now, considering there's 5 times more of the accounts on the market, in brokerages and retail accounts than there were before. So I actually think this is why stock splits are being so much more bullish. I actually saw this hilarious Wall Street bets of this guy's like, buy Tesla 1,000 puts at $2. You're guaranteed to make money when it splits. And just like that is the mentality that is causing these splits to drive with all these new retail investors in the market.
Okay. So Anthony O'Hayan, still bullish, most likely through the end of the month, but growing cautious because he has a lot of company now that you didn't have 3 months ago. How long ago was it that you were on? 2-3 months ago?
I think it was like I think it was around May. I think that's when we were
okay.
2800s, I think.
And I can affirm that Anthony was talking like a bull back then. And I was probably selling a 61.8 retrace. So, Anthony, if you ever need to adopt an uncle or a grandfather, keep me in mind.
I'd be honored.
But in this business, you're my trading warrior brother, and I appreciate you coming on. What's the best way for people to follow you, get in touch with you?
Yeah, you can follow my Twitter at Anthony O'Hayan, Ohayon. I do post weekly podcasts on my podcast at Pounding the Table. On Twitter, it's at Pounding the Table, DA Table. Yeah. We just talk for an hour every week about stocks. So I do, everything we're talking about really, on my Twitter is what we kind of focus on there. But yeah, send me a DM, comment on stuff, and I'm happy to respond.
Thank you a lot, Anthony, for being here, edifying the community, updating on some interesting upside targets for the market. And we'll do this again in 3 months and see what's happening and see if Apple will have a worm by then. But sounds like we have a bull market going for a few years here.
Yeah,
a few more years.
It could be the start of a very long one, as long as things get better, in my opinion.
I know there are, some bulls that I know are talking 2023, 2022 to 3, that it has that much of a runway in time.
That's what I'm thinking too. Obviously we're going to get retracements and corrections in that time, especially with how especially I would say in the tech sector, because how parabolic the Qs have gone. Yeah. But that's about the time when interest rates might start picking back up. And as we know from the last few years, tapering off the balance sheet and raising rates is what's going to make the market stall. So whenever that happens is when I would say this bull market is going to stall or decrease.
All right, buddy. Good hunting. Thanks again. It was great talking to you, Anthony. I'll get a hold of you later in the day, and we'll set up a day like sometime in November. Okay?
Thank you. Always a pleasure, Dale. Have a good one.
All right, partner. The Anthony O'Hayan, the bull, remains so. Unshaken. All right, that's a wrap. Remember, don't just count your stock splits or your Krugerrands if you're an old codger. Count your blessings, and we'll see everyone tomorrow. Adios. Thank you, Anthony.